Before we start with our presentation, let me introduce our team members. Firstly, we have Ahmad Razin bin Ahmad Rizaluddin. Next, Nur Khairina binti Hamdan, Nurul Huda Izzati binti Muhammad Rosli, Nurul Syaira binti Azhari, and me, Siti Aisyah binti Ismail. Okay, so for question 5, we choose to explain how conceptual framework is helpful in solving the accounting for property development. From this question, there are some arguments that the development of a conceptual framework is inappropriate because accountants constantly deal with specific issues that will not be envisaged by an overall general conceptual framework. In particular, the accounting conceptual framework makes no allowance for differences in the social context where accounting is applied. They also argue that it will be preferable to develop case-specific solutions to accounting issues based on case study research and bearing in mind the social context of all accounting decisions. Okay, so now I will explain what a conceptual framework is. Actually, the accounting conceptual framework is a set of accounting objectives and fundamentals which is developed by the International Accounting Standards Board. Why they develop this framework? Because to ensure uniformity in interpretation across various accounting methodologies. So it helps the board in setting some financial accounting standards and help members of the board constituency not only to understand and apply to standards, but also contribute significantly to their development. Okay, so the conceptual framework is not a standard. Nothing in the conceptual framework overrides any standard or any requirements in the standard. It does not establish new accounting standards or change existing GAAP, but it is only a foundation in establishing new standard or amending existing standards. Next, I will explain the purpose of conceptual framework. So there are three main purposes. First, it is to assist in the development of future IFRS and the review of existing standards by setting out the underlying concepts. Second, it is to assist preference to develop consistent accounting policies when no standard applies to a particular transaction or other event or when a standard allows a choice of accounting policy. This is to promote harmonization of accounting regulation and standards by reducing the number of permitted alternative accounting treatments. Okay, so the lastly is to assist all parties to understand and interpret the standards, which mean it assists the preparers of financial statements to understand and help them in the application of IFRS, which will include dealing with the accounting transaction for which there is not yet an accounting standards. Okay, before I explain why conceptual framework is important, I will explain some serious defects produced by accounting standards during the absence of conceptual framework. Okay, so first one, they were not consistent with each other, particularly in the role of prudence versus accrual or machine. Second, they were also internally inconsistent and often the effect of the transaction on the statement of financial position was considered more important than its effect on income in the statement. Third, standards were produced on a firefighting approach, often reacting to a corporate scandal or failure rather than being proactive in determining best policy. 4. Some standard setting bodies were biased in their compositions, it meaning that it is not fairly representative of all users group, and this influenced the quality and directions of standards. Fifth, the same theoretical issue were revisited many times in successive standards. It could be claimed that the lack of conceptual framework has resulted in the rise of rule-based accounting system. So the key objective of which is process all accounting transactions according to detailed specific rules or standards. Although such a system is rigid and prescriptive, it offers the advantage of making financial statements more comparable and consistent. The availability of a conceptual framework, on the other hand, may lead to a principle-based system in which accounting standards are formed from an upgrade conceptual framework, which is it have their specific goals. Okay, so now I will explain why the conceptual framework is important. First, accounting framework can help a better understanding of accounting information. This framework is financial reports users in understanding the data contained in financial statement prepared in accordance with financial accounting standard. Second, It directs future financial accounting standards development and regulation of management subjective judgment while generating financial statements and other financial reporting. Thirdly, for investors, a conceptual framework is vital. This is because it can provide the risk capital to investor and the advisor is concerned about the risk associated with their investment. The information is required to assist them in deciding whether to sell, purchase or keep the shares while the shareholders are interested in information that allows them to assess the company's ability to pay dividend. So, employees and their representative groups are also interested in the company's capacity to provide retirement benefits, job prospect and remuneration, as well as information that allows them to assess the company's ability to do so.
Thank you, Siti Aisha, for the great explanation. Hi, my name is Nokairina. Now, I will continue the presentation on the limitation of the conceptual framework. The first one is it's very difficult to set up. It takes time and costs a lot of money to establish a conceptual framework. Time-consuming may become the limitation of the accounting conceptual framework. Developing countries may not be able to afford to develop an accounting conceptual framework. Second, it may lead to rigidity. The concept of conceptual framework is rigid and encouraging. Incorporating new ideas to it is difficult. Next, there is always a conflict between previously developed accounting standard and conceptual framework. Other previously established standards sometimes differ from the basis principle of the conceptual framework. Lastly, the limitation of the conceptual framework is made not acceptable by every party. The opportunity that a conceptual framework provides may benefit only some of the users. The framework cannot always be workable or acceptable to all parties. Next, I will explain about the property development. Property development is to refer the business of acquiring land for the purpose. First is construction thereon and selling completed residential and or commercial and industrial building, whether as a whole or by the partial therein. And second is development and sale of the vacant lot for the construction, such as building, thereon including homestead, hobby farm, orchard, and for other similar purpose. Now, let's look for the property development activity. According to FAR661, property development activity are defined as activity involving the necessary steps to plan and construct and comply with statutory and contractual requirements in the development of land into vacant lot, residential, commercial, or industrial building. Moving on to the next slide, I will explain on the nature of property development activity. An entity that engages in property development activity acquires land, develop the land into property, and sell the developed properties. To such as entity, land under development form its stock of trading asset. The nature of its business consists mainly of, first, acquiring land for the purpose of development, such as constructing house or office building. Second, selling completed residential and commercial and industrial building, whether as a whole or partial therein. Third, the development of vacant lot for sale. The development of plan for sale is usually staggered in phase, such as that each phase constitutes as identifiable project for the purpose of monitoring costs and revenues. In FRS 201, define a project as a cluster of development unit erected within a designated geographical area, forming a cost accumulating center. Within each project are the development unit, such as residential, commercial, industry, building, and vacant lots developed for sale. That's all from me. Thank you. Now, I will pass to the next presenter, Ahmad Razin.
Okay, thank you, Karina. Next, I will present the objective of property and development and scopes of property and development. Okay, the objective for property and development is to prescribe the accounting treatment for revenue and costs associated with property development activities, and also to determine when revenue and related expenses and hence profit from property development activities shall be recognized in the income statements. Okay, next is the scopes of property and development. apply in accounting for property development activities in the financial statement of an entity undertaking property development activities, including those governed by provision of the Housing Development, Control and Licensing Act 1966, whether or not such operations are their main activities. Okay, next is land held for property development. Okay, first, land held for property development shall be classified as a non-current asset. Next is a land held for property development shall be carried at cost less any accumulated impairment losses. Lastly is the change in the classification of land held for the property development to current asset shall be at the point when development activities have commenced. We will discuss all this in the next slide. Okay, next we will discuss the components and recognition of property and development. Okay, first is a land held for property development. Okay, first is land held for property development shall be classified as non-current asset when no development activities have been carried out or where development activities are not expected to be completed within the normal operating cycle. Okay, next is land held for property development shall be carried at a cost less any accumulated impairment losses. An entity shall be apply FAR661 impairment of asset to determine whether the land has become impaired. Last but not least is the change in the classification of land held for property development to current asset shall be at the point when development activities have commenced and where it can be demonstrated that the development activities can be completed within the normal operating cycle. Current asset, as explained in FAR 101 presentation of financial statements, are those assets which are expected to be realized or held for sale or consumption in the normal operating cycle.
Thank you, Ahmad Razin. Okay, now we shall look at the component of property development cost. FAR 201 prescribed that property development costs should comprise all costs that directly attributable to development activities or that can be allocated on a reasonable basis to such activities. The cost accumulated to property development project shall be recognized as an asset, essentially a work in progress in a SOFP. When units are sold, a portion of the cost based on the stage of completion is transferred and recognized as spent in income statement to match it with the related project revenue. For the second point, FAR 201 also stated that costs relating to property development activities can be divided into costs associated with acquisition of land, which include the purchase of price of land, contribution costs, and incidental costs such as stamp duties. Related costs incurred subsequent to the acquisition of land can be capitalized only when there are development activities in program. It also can be divided into costs related directly to a specific development activity, which is during the construction stage of property development, such as professional fees and constructor costs for building works. Lastly, the costs divided into costs attributable to the development activities in general can be allocated to the project include common infrastructure, such as costs that will be allocated to existing and future property development project within the geographical location, and costs that will be allocated to all projects are currently in progress in various locations. Okay, next we move on to another component of property development, which is the property development revenues and expenses. Okay, the standard stated that property development revenue shall compromise the selling price agreed in the sale and purchase agreement and any additional revenue due to the variation in development work. Hence, property development revenue should be recognized in respect of all development units that have been sold. This standard basically requires that when the outcome can be estimated reliably, such revenue shall be recognized in profit or loss by reference to the stage of completion of development project. Moreover, the revenue recognition commences when all the criteria are met, including when the sale of development units is effect upon the commencement of development and construction activities. And when the financial outcome of development activity can be reliably estimated of only all the conditions are met, such as total revenue can measure reliably, it is probably that the economic benefit will flow to the entity both cost the complete and stage completion of development project at the balance sheet date can be measured reliably, and also the cost attributable to the development activities can be clearly identified as measured reliably. Meanwhile, the standard prescribes that when property development units are sold, the attributable portion of property development costs shall be recognized as spent in the period which related to revenue is recognized. It further stated that property development revenue as an expense shall be recognized in income statement when the outcome of a development activity can be estimated reliably. Okay, next for the component of estimate revocation of sales and incentive, the standard requires that estimate and cost allocation shall be reviewed at the end of each financial reporting period until the project is substantially completed. Shall be revised and reallocated where necessary for any changes on the basis of current estimates. The effect of change in accounting estimate shall be included in the determination of net profit or loss in accordance with FAR661 108. As a result, in uncertainties inherent in property development activities, cost and revenue estimate cannot be measured with precision for a property development project. The effect of cost revision apply prospectively in the current and future periods until project is complete. Also, the standard requires that the project development revenues and expenses are recognized shall be immediately written back as soon as a revocation of sale occur. The effect of this requirement is that profit previously recognized on unit zone are to immediately written back as soon as revocation of sale occur. When sale incentive of other guarantees are offered to induce sale, the estimate, obligation, and research incentive or guarantees are accounted for or according with FAR6 137. It is common practice for property development entities to offer incentive to entities buyer. The incentive may be in the form of developer's guarantee, occupancy of the development units, or guarantee retained on the purchaser investment for a specific period. Uncertainties exist as the extent that purchaser will allow the entity to manage on their behalf, demand for rented properties and amount for rental chargeable. Under such situation, it may be difficult to estimate reliably the obligation to be undertaken by the entities. Other incentive or professional costs incurred by the property development entity that are associated with the sale of development units shall be capitalized but are to be recognized in the income statement. Lastly, it relates with the inventories unsold completed development units. This standard requires that inventories of unsold competitive development units shall be stated at the lower of cost and net realizable value. Unsold development units are basically inventories, and accordingly the measure principle of FAR6 102 inventories shall apply. Therefore, development units that are retained by the property developer as management office or investment rental shall be accounted for in accordance with FAR6 116 property plant and equipment, or FAR6 140 investment property respectively. That's all from me. Now I will pass to Nurul Shahira.
Thank you, Buddha Izzati, for the great presentation and explanation. Next, I will present to you the benefit and the drawback of the conceptual framework. So, why this conceptual framework can be helpful for property development, we will discuss in terms of MFRS and MPER standard, because those were developed based on the same framework, which is the conceptual framework. As explained before, this conceptual framework assists MASB in the development of future standards such as MFRS or MPERS and its review of the existing standard. So, on MFRS, it is helpful for property development because this standard addresses the property development properly as there are specific issues involved. Those issues include accounting treatment when only one unit property is sold, which the developer needs to estimate the stand-alone parts of the property. Also, allocation of the common costs for a different project such as direct or fixed costs to assist in the decision-making process. Another issue is the computation of the percentage of completion that used if the revenue and cost of a project can be reasonably estimated. This method is subject to the fraudulent activity, which is usually overestimating the amount of revenue and profit that should be recognized in the financial statement. While MPERS is helpful when dealing with specific issues, based on the case study on the framework related to COVID-19 by Ayuni and Nazlia, it helps the developer to organize their operations smoothly that meets the requirement needed due to the characteristics such as relevant and timeliness in the standard and conceptual framework. The case study also stated that it is useful information if it reflects the relevant event that occurred at that time. Furthermore, MPERS also is a less rule-based standard, which means that even if you have a wrong judgment on your reporting, you still can argue it out depending on the circumstances and situations. Besides, it provides greater flexibility in the property development decision since the company can choose the best method or policy that suits the requirement and is based on the circumstances. However, this framework might also not be helpful for property development. As for MFRS, it is stated that if there is uncertainty inherent in the property development activities, the cost and revenue estimates cannot be measured without precision. So, without a proper precision cost estimated for both ongoing and future projects, it is not helpful as this estimation will not reflect the on-time event and situation. While MPERS might not be helpful on property development because there is no new standard regarding property development activities issued by MASB. Since then, after 1 January 2006, no new standard has been issued between the first and the new reporting MPERS. The gap is between 10 to 11 years. The first framework has not been revised to incorporate changes in the last 11 years, even though the MFRS has made significant adjustment, development, and enhancements. IFRS and MFRS will always change, but not SMEs. MASB will release MPERS to introduce the improvement to the small and medium enterprise, which are SMEs, and to see the quality of financial statements since the introduction. So, this shows that the standard between those years may not reflect all uncertainty occurred during the gap. Thus, it may not be helpful as the uncertainty event on the gap could happen again, but the new standard has not incurred or stepped by those events. In the conclusion, the conceptual framework, which is the basis of MFRS and MPERS standard, is met with the flexibility to suit any situation and also uncertain event. However, those standards such MFRS is made based on an estimation that might not reflect the actual information, while MPERS might not reflect the event occurred during the gap with the new standard. So in this case, the company might also need to construct its own property development framework based on the company's policy and procedure to follow up with the circumstances and meet the requirement. The company's framework was still based on MFRS or MPERS standard, but revised on their management and operations policy. So it can be used with significant changes in situation and circumstances. Based on the case study of a successful property development framework by Ivo Altona, it explained that we should construct a conceptual framework before we begin collecting data. The framework is constructed within our company's policy and internet control procedure that can illustrate our research for successful property development. Therefore, any estimation made on uncertain event can be predicted by the company. However, even though the company already has its revised framework to follow with the developed conceptual framework, which is the basis of MFRS or MPERS standard, is still important to take into consideration. It is because the improved conceptual framework may assist preparers of financial statements in developing accounting policies for a transaction or even not covered by existing standard. Due to that, a company may not need to incur more time or cost to revise its own framework as the standard has been reflecting the event. The same goes for developing a specific solution to accounting issues. The case developed might be useful for companies or SME to adapt to the current issues. It is because those case-specific solutions are still in the context of all accounting decisions referring to the standards such as MFRS and MPERS, and it just is developed to fit into the case related to the issue. In addition, they also issued 2014 and 2015, which there are some changes made to the standard MFRS 201. MASB has announced that this MFRS 201 or property development will be replaced by the new standard of MFRS 15, revenue from contract with customer. Due to this, it might be quite challenging for the company, especially the developer, due to the meeting the requirement of the new standard. The company may face some difficulties such as the need to incur more employees training for the new standard and additional disclosure requirement needed in their financial report, and also incur additional costs and etc. Fortunately, these difficulties could be adapted if the company ensures that they have an appropriate system internal control policy and procedure in place to collect and disclose the required information. So, answering the question, this development of the conceptual framework is appropriate since it can be adapted with the company's plan or policy, and it is also preferable to develop a case-specific solution to an accounting issue based on a case study research and bear in mind the social context of all accounting decisions. It is because it helps the company, especially accountant, to solve all the uncertain events or issues that arise during that time. That's all from us. Thank you.